So, what's your guilty pleasure when it comes to spending?
I'm a foodie, so I read about Warren Buffett. I started reading Investopedia, and somehow it clicked. This is my calling. This is where I want to build my career. As you rightly said, every goal should be smart. So it should be specific, measurable, achievable, relevant, and with a proper time horizon.
Hi everyone, welcome to Build with Shreya. I am your host for today, and we are going to dive into a very interesting podcast on personal wealth management. I think wealth is all about managing your funds and getting them ready for putting into social and intellectual capital around us, and that's why we have brought here with us an interesting speaker who can speak to you about different insights and give you some tips on how to accumulate that personal wealth going forward. So we are thrilled to have with us Mr. Sumit Duseja, who is the CEO and co-founder of Truemind Capital. He has had a wealth of experience of over 18 plus years in the financial industry. He is a CFA charter holder and is here to share a lot of insights with us. So we are super excited to have you.
Thanks for having me, Shreya. I'm looking forward to our conversation today.
Absolutely. So let's get started.
Sure.
So I have had a very conventional journey personally.
Mhm.
Started as an engineer, then a product person, an entrepreneur, sitting on my laptop building something. But I'm always intrigued with people who have taken drastic pivots in their journey, and I think that's where you were a chemical engineer out of IIT, and then switched into the financial industry. So we would really like to know how that transition happened and what motivated that.
So my journey never have been a conventional way
Mm-hmm.
throughout my career. Somehow I can say maybe part of my personality trait. But what happened, when you are in my times, when I went for engineering, there were very limited options. Engineering, either you go for a CA or
Yeah.
you become a doctor. And if you are good in studies, you end up taking non-medical. And when you take non-medical, then your natural progression is to go for engineering entrance exams.
Right.
And if you're you have high aspirations, you target IIT to clear IIT JEE.
And which
So
we
this,
achieved.
yeah, which I cracked in my first attempt.
Yeah.
So it was more of a herd mindset that I was going through,
Got it.
not something which I really decided I wanted
Mm-hmm.
to do. It's mostly like what my friends and my circle
Absolutely.
led me to. So once I was there into, I was in love with all the subjects, physics, maths, chemistry, and I really enjoyed my entire preparation time. After getting my results, so based on my rank, all India rank, I got chemical engineering in IIT BHU.
Which is great. I mean, it was one of the coveted engineering branches during that time.
Certainly.
Yeah.
Although many people wanted to get into computer science and get into software industry, and even I wished a little bit that I should get there because everyone was telling me that I should
Absolutely.
pursue this. But when in college pursuing chemical engineering, I was very clear from the very beginning that I would not be taking up any job in chemical industry,
Right.
nor I will go for software engineering,
Mm-hmm.
which most of my friends, my batchmates were preparing for, because eventually the companies which come to the campus, they're all IT companies like Infosys,
Absolutely.
TCS, Wipro, and they hire in bulk.
Mm-hmm.
And the main objective that time was to get a job.
Mm-hmm.
So you get a job easily in a software industry, and that's what all of my friends were pursuing. But here I kind of never be able to align my interest in coding. I tried coding, I found it boring,
Mm-hmm.
and I was completely disillusioned. Not chemical engineering, not
I think
software
that was the
engineering.
same with me with chemistry.
All right.
I don't think I ever got my ropes around the subject. But yeah, I mean, just did well, but yeah, it was
Hmm.
just difficult.
I agree. I mean, it totally depends on what how your nature
Absolutely.
blends with what you would want to do
Mm-hmm.
and pursue in your life. So I was disillusioned, that what I would want to do, and I was completely clueless. Then in third year, when everyone started, my friends started preparing for CAT, MBA exams. So I thought, okay,
Again, that hurt started.
again, because I didn't know what to do, so I thought, okay, let me also do the same thing. At that point in time, I got introduced to the concept of finance, I got introduced
While
with the
preparing for
concepts
CAT.
while preparing for CAT,
Okay.
because that time, you read about stock market, you read about business magazines, you read some books, you start reading books, and I got introduced to some fantastic books, and I read about Warren Buffett. I started reading Investopedia, and somehow it clicked. I thought, okay, this is my calling. This is
Okay.
where I want to build my career. So
Wow.
fourth year of my college time, I devoted myself into self-studying everything related to investment, finance. I did some certification courses of NCFM that used to be popular at that point in time. So I did some 4-5 courses.
Right.
So although I got a job during campus placement in a software company, I did not join it.
Okay.
I
That's a
right
bold decision.
Yeah, that's what I was saying, that it's an unconventional way I always lived my life like. And conventional way would have been, you clear engineering, go to MBA college, and then go to finance.
Agreed. Agreed.
And I did not have also somehow luxury to get into MBA college, because I also knew the importance of me contributing to my family. So what I thought, okay, based on these certification courses, let me try my good luck in the investment management space. And my clear vision and idea was to set up my own investment management practice at some point in time. But being from engineering college, I did not know much how to navigate my way through this.
Right.
So when I passed from my college, then I looked for a job, and luckily got a job with a company where I started as a relationship manager,
Right.
selling mutual funds and
Mhm.
PMS. And that's how the journey began. And obviously, the God has been kind, and things just happened, one on one.
Yeah, so just listening to your journey, I just feel, what if the financial literacy that that you sort of took
Hmm.
over while preparing for CAT, what if it would have come earlier? Maybe you wouldn't have actually followed that herd, gotten into IIT, and maybe you would have pursued something that was more relevant to your interest from the start itself. And
Hmm.
if we look at around us, in India, our educational institutions today, they're not really focused on proactive financial literacy when it comes to teaching
Hmm.
their students. However, if somebody wants to absorb those things, what are your recommendations? How can they get started? And I know that that's one of your focus now,
Hmm.
while we had earlier conversations, I think that's something you really focused on while speaking to me as well. So, what are your tips there in terms of becoming more financially literate? And then, when can one start planning their investment portfolio? What is the right time? When can we say,
Hmm.
okay, now we are at a stage where we should start thinking of taking these decisions?
So see, there are multiple disciplines which I believe are missing in the school and college curriculum, which should be introduced to make us a better human being and more successful human being.
Absolutely.
Um, so one of these is obviously, having some basic understanding of financial planning
Mm-hmm.
and personal finance.
Mm-hmm.
Uh, so maybe there's a possibility that schools can introduce as an add-on subject,
Mm-hmm.
where they can talk about some basic personal finance aspect, to not get deeper into it, but create a framework, a mindset that how you should approach it. So
Absolutely.
if you know how to approach it, then you can build over it. On the similar lines, one can teach about how to be, how to maintain civic conduct in
Mm-hmm.
public, then how to be happy.
Mm-hmm.
So
Yeah,
so
those are some
so the
things that are not
basic
missing.
things
Yeah.
which are missing, which are all needed to make you an accomplished person. So it's not about rote learning. It should be more about how you should learn, what you should be approached towards learning. And these small things really help in a long way to make you as a good person,
Absolutely.
and make you a successful person. So these things, I think, should be started from the school time,
Mm-hmm.
and then should be also part of a college curriculum,
Mm-hmm.
irrespective of which discipline you are.
Agreed. Agreed.
Because there is no rocket science involved into it, there are some very basic concepts which can be introduced in the school curriculum.
Mm-hmm.
And I would want to further go into changing the way education is being also delivered, but I think that would be a different topic altogether.
So I know,
But I think you got the
like
point.
people, like all the clients that come to
Mhm.
you, not all of them are financially literate. I mean,
Yes.
they would want to sort of think about, okay, what do we do with these funds that are there?
Mhm.
How do we park them?
Mhm.
How do you take steps to help them understand this
Mhm.
space? Like, what is it that you do? What are some of the recommendations you have for them?
So see, every person has a very different relationship with money.
Yeah, true.
So it's very unique. A brother can be very different from another brother
Hmm.
or another sibling.
Hmm.
So here it totally depends on your risk capacity, your risk appetite, as well as how you behave with money. When any client approaches me, I first try to understand, my client, whether that person, what kind of person he is, his personality, his or her personality. I would like to delve deeper into their investment experience so far to get a sense at how they behave with their money. So
Right.
how they look into the aspects of savings, investing. What are their views regarding achieving their long-term goals? So once getting this idea, I try to mold their behavior around how they should approach the investments and align the portfolio, create a portfolio that represents their personality. And obviously, not everyone has a clear idea about their
Yeah.
finances, and especially people coming from creative field. And those who do not have much time apart from their busy working lives.
Hmm.
So that's where it's very important for these people to first sharpen up what the wrong they have been doing, improving what wrong they have been doing,
Absolutely.
and then after having a clear platform, then have a clear view, bringing discipline, bringing a behavior aspect into investment to start the journey. That's how it begins. So my first introduction is always about educating my clients about finances so that they are least element of disappointment.
So
And that's
actually,
a major
yeah.
part which disrupts the journey of many people if they do not have right expectation with respect to the
Yeah, I
investments.
think as I understand, you're basically empathizing with the client first. You sort of empathizing with the personality, with the motivations. What is it they want to be doing or achieving while they
Exactly.
do that?
So
And
investment management is one aspect, investor management is another aspect.
true, agreed.
So it's more about how good you are in understanding your client, how
Hmm.
good you are helping them during market volatility. Because when you're investing, you are very attached to the savings you have, the investments you have.
Yeah,
So any volatility can create element of greed and fear.
absolutely.
And if you are if you start taking decisions based on greed and fear, you end up committing major mistakes in the market. So that's where my role also becomes a behavioral coach in
Agreed.
helping them navigate through the market cycles.
Right. So, I mean, just stepping back a little, whenever anybody is trying to achieve something, they have a goal that they define. And specifically in our industry or in the business industry, you have something called SMART goals, which are very
Yes.
specific, measurable, actionable, right? So, if somebody wants to achieve something when it comes to personal wealth management, how can they go about defining their financial goals? And, what is the kind of structure that they can follow?
So as you rightly said, every goal should be smart.
Mhm,
So it should be specific,
mhm.
measurable, achievable, relevant, and with a proper time horizon.
Mhm.
Uh, so once your goals are defined in this aspect, what could be your goals like? It could be funding your children education.
Right?
It could be funding your retirement,
Hmm.
because at some point in time you'll stop earning. You need a
Yes,
corpus to take care of, to see you through your retirement years.
absolutely.
You need to buy a house, or
Hmm.
you need to maybe go on a world tour. So there could be multiple goals
Hmm.
around. Now once your goals are clear that okay, these are the things on my priority list, then you look into the aspect of what savings and what investment portfolio you have right now,
Right.
and what you need to invest on a monthly basis or save on a monthly basis, and invest in a way that can help you achieve your goals comfortably.
Absolutely. So you work backwards.
So it works
Yeah.
back, we work backwards and also give a sense and clear picture to the clients that uh, whether whatever you are hoping for, whether it's achievable or not.
Right.
If your expenses are very high, your savings are little, then maybe you should increase your savings to be able to achieve your goals.
Right.
If your time horizon is something which is limited, then obviously you have to further increase your savings. If you think you do not want to take a significant risk, then maybe some higher element of risk is needed to generate higher returns to be able
Absolutely.
to achieve those goals.
Mhm.
Or otherwise you have to prioritize your goals accordingly. Retirement goal is something which is most important. Many people do not understand that there is a ticking time bomb in India where there could be major retirement crisis,
I see.
because they do not understand what is the corpus they would be needing at the time of retirement. It's not something that you are spending today
Mhm.
and you calculate your portfolio. No, you have to take into account the inflation aspect also.
Absolutely.
So inflation will keep on making things expensive. So at the time of your retirement, you need a bigger portfolio than what you have assumed.
Yeah.
And in such a way that after retirement also, obviously, the inflation will keep on rising. So you
Right.
have to account for that as well.
Yeah. Yeah. I mean,
So
wealth is
that's
all
where,
about
yeah,
compounding and,
yes.
different things sort of coming
So
together.
compounding works in inflation aspect. So,
Absolutely.
the way in,
So you need to balance that compounding with your wealth compounding over time.
certainly.
So a couple of days back, we saw the market crash. Like the Sensex was down by 1700 points. So as a wealth manager, how do you approach such volatile times? And what are the recommendations about maybe certain smart opportunities that people might have during these uncertain times as well? So yeah, would love your insights on that.
For a smart investor, volatility is a friend. So you really need to look into volatility as a way, as an opportunity to create better returns on your portfolio. So opportunities can come in the market at any point in time.
Right.
Anyone who is regularly reviewing, monitoring, and looking at the market at scale would be able to find out opportunities if they have the right skill set to do so. Having said this, if you do not take volatility in your stride, you would never be able to generate higher returns.
Right.
So your expectation should always be, whenever you are making investment, that volatility is going to happen. Now, how much volatility you are comfortable with will depend upon your risk appetite and your risk profile.
Mm-hmm.
So basis which your portfolio should be designed. And if you have yourself a knack to identify opportunities, well and good, you can always find one. But if you do not have time and inclination or skill set for the same, a good investment advisor can help you with the same.
Great. So, just coming to managing portfolios. So, I have personally
Mm.
invested in MFs, SIPs.
Mhm.
Some of it is in, direct investments in startups, funds, right? So, how do you suggest somebody approaches diversity when it comes to their own investment portfolio? And how do they actually evaluate if they're doing the best that they can?
Diversification is something which is very important in the current investment environment or economic environment. We are living in a very uncertain times.
Absolutely.
Therefore, one shouldn't be betting significantly on particular asset class or particular investment. Just to give you a sense, what I'm trying to explain on the diversification part is that you will have to look into different asset class for your investment. Different asset class means primarily there are four asset classes.
Mhm.
One is equity, second is debt, third is gold,
Okay.
fourth is real estate.
Mhm.
In equity, then further you can dissect it between large cap, small cap, mid cap, US focused equity or China focused or emerging market focused equity or startup investing. All
Right.
right. Within debt, it could be bonds, it could be debt mutual funds or
Mhm.
arbitrage funds,
Mhm.
or there could be private debt. So there could be multiple, investment options within debt asset class, and you can, based on your investment horizon, your risk appetite, your portfolio size, you decide what element should be there in your portfolio. On the gold side, one can look at gold funds or ETFs or SGBs. Uh, Unfortunately, SPGBs have been discontinued by the government because they had to incur a lot of losses, and retail investors made huge gains through SGB investments. I do not want to delve much into real estate, because if you want to invest in real estate, it sometimes take a significant chunk of your overall asset. My recommendation is always here that you should not be having more than 25 to 30% real estate in your overall asset.
I see. Well, that's not conventional.
Yeah,
I
that's
mean,
not conventional.
usually,
Yes.
I mean, if I talk about the common knowledge,
हम्म
you know, सबसे पहले people want to buy a घर.
हम्म
तो
हम्म
वो आई थिंक वो एक्सटेंड करता है जितना मनी
हम्म
इज ऑल्सो देयर इट
हम्म
यूजुअली एक्सटेंड्स द अवेलेबल मनी सो मे बी 200% of what they have right now.
Certainly,
So
certainly. Taking loan is something that
yeah,
people end up buying a house,
absolutely.
which I think works against them if you apply the same compounding principle. So when we say the wealth compounds, you take advantage of compounding
Right.
by starting early and making regular investment. Give it time.
Mhm.
The compounding works wonders. It exponentially increases your wealth.
Mhm.
Similarly, when you take a loan, you are giving interest to the bank.
Absolutely, yeah.
So in that case, compounding is working against you.
Correct, but then there would be appreciation in the real estate, which sort of like over that period of time the loan is there, so there would be some balance probably there.
See, every asset class goes through a cycle.
True.
Be it real estate, equity, gold, which stage of the cycle you are investing at.
Correct.
That really matters how successful that investment is going to be.
Correct.
In India, the interest rates are high on home loans. Contrary to the popular perception, real estates do not deliver very high returns in the long term. So there could be cycles, you have maybe early in the cycle and you enjoyed the ride, maybe, 2-3 years, the returns are fantastic. But there would be time when there's nothing happening in the real estate. Your the value of your real estate investment is either stagnant or growing very marginally, or maybe going down. That's a huge opportunity cost you bear. So if you do thorough study across different metro cities and places where you think you can make investment in real estate, you would find out that the returns are not as high as one imagined.
Okay.
In the long term. And you obviously, not everyone is a pro to understand that I should enter right now in the cycle and be able to exit in the cycle at the stage of the cycle when it's very, at the very expensive level. So that's where that is one very important aspect. Second is that when you invest in real estate, you have let go of liquidity.
True. Yeah, absolutely.
So this is a concept called optionality. Optionality means how easily you can exit from one asset and move to another.
Right.
Because there could be opportunities in different asset class at different point in time.
I mean, it's the same with startups as well, especially if you're investing early on. When do you really get the exit? I think even though it's like, high risk, high return, but then the time frame is not very well defined.
Certainly.
Yeah, I think that optionality then becomes very important while you choose asset classes. And so, like coming to that, SIPs, they're a choiced option by wealth advisors. So if you could tell a little bit more about that, and as well as mutual funds, like, and how should one sort of take decisions between these asset classes, and even if there are other insights about others.
So SIP is a wonderful tool to build your wealth in a disciplined manner. Through SIP, systematic investment plan, when you start SIP, every month a fixed amount gets deducted from your bank and invested on a fixed date in a mutual fund scheme or a mutual fund portfolio that you have already decided.
Right.
So if you are earning on a monthly basis, if you're a salaried person or having income generating every month, you should start an SIP right away, making clear case for saving going to investment first, and then whatever is left should be looked into expenditure.
Got it.
Right. So once your disciplined way of investment starts, you do not have to also worry about timing the market, because SIPs is something which will happen at a higher market level, at a lower market level, and it will average out your buying price. So in the long term, it becomes a great tool to benefit from power of compounding and build wealth in a disciplined manner. In case of investment, discipline is very much needed. And
Absolutely.
SIP helps you maintain that discipline.
So how much, like as you suggested that real estate should be like about 20% of your portfolio. How much?
20-25%.
So for SIP, what would be the recommendation around the spread?
So see, I think a lot depends on your disposable income, how much you are earning.
Maybe we could look at some brackets, of disposable income. Maybe you can suggest accordingly.
So someone staying in a city like Gurgaon, earning maybe 2 to 3 lakhs per month, should have SIP of at least a lakh
Okay,
per month.
I see.
So that should help you create meaningful portfolio. Having said this, sometimes you are constrained by other factors. In that case, even if you would want to start with an SIP of say 5,000 or 10,000 per month, you must
At least start that.
at least
Take
start
that
it. At
step
least
so
start
that
it. Yes.
going you have that in your vision.
Certainly. If you start it, you understand how it works, and then when the time is right, you can increase your SIP, and you have a chance to build portfolio and benefit from compounding.
Right. So now we're going to start with the rapid fire. We are now delving into a rapid fire section, and so I'll ask you a question, and you just give me a quick reply, and that's all the rules we have here.
Okay. All right. Let's dive in.
Perfect. So here's the first question. What's your favorite investment book?
The Warren Buffett Way by Robert G. Hangstrom.
When did you read it last?
So I first read it in 2006.
Okay.
And I reread it, during the time I was building my own investment philosophy.
So you knew that this is something I want to go back to.
Certainly. Yeah. That has helped tremendously in creating my investment thesis and philosophy, the way I look after investments.
Great. All right. So awesome choice. Next, stocks or bonds?
Certainly stocks. I mean, there's no second thought to it. Stock is something that helps you beat inflation. Yeah, and bonds can keep you, keep you even below the purchasing power. So stocks any day.
Great. So what's your go-to platform or app for managing investments?
I use MyCamps.
Okay.
And MF Central.
Okay, great. What's your favorite quote about money or investing?
So again, Warren Buffett quote: "Be greedy when others are fearful. Be fearful when others are greedy."
Wow, that's a good one. If you could describe your investing style in one word, what would it be?
Sustainable.
If you weren't in finance, what career would you choose?
I think I would have been a psychologist.
Wow, I think that's the first step. Any which way you empathize with your customers. So
right.
there.
I like understanding psychology. Individually as well as of the herd psychology. So that gives a pretty good insight of how people tend to behave, and accordingly, you can create solutions. Absolutely. To help them navigate their path.
Great. So what's your guilty pleasure when it comes to spending?
I'm a foodie, so so I like going to good fine dining restaurants. I like good food, so wherever they are, I'll go.
Awesome. If you could invest in any fictional company, which one would it be?
I think the major problem humanity is facing nowadays is, in the future could be global warming. And the negative impacts of that. So something which can help reverse the negative aspect of global warming. If some company can do it at scale, I would be happy to invest in that company. Yeah,
I mean, we want to live. Okay. If you could describe the stock market in one emoji, which one would you choose?
Okay, so there is an emoji with the dollar eyes. I think that would be the apt emoji for stock market.
Great. If you could use one word to describe the financial market right now, what would it be?
Not right now. Every time I'll say uncertain. Financial markets are always uncertain. So you need to prepare for uncertainty to be able to have successful investment returns.
What's the best financial advice you've ever received or given?
So the best financial advice I ever received is debt reduces or subtracts options, savings, add them.
What's the craziest investment idea you've ever heard?
Nowadays, there have been a lot of crazy investment ideas going on, but one I think was completely irrational was NFT, uh,
That's a
which
controversial one, but yeah.
I felt that it's been a very speculative way of
Mm-hmm.
making investment. Maybe some people would disagree, but for me, I mean, I do not know how to value these NFTs and what tangible benefit they can offer.
And what's your perspective on crypto?
Okay, again, so for me, making investment anywhere requires me to understand how to value those investments. What characteristics are there to be the part to make them part of the portfolio, which will complement overall portfolio.
Right.
For cryptos, I have read a lot, have asked this question to multiple crypto enthusiasts about how do you value a crypto,
Mm-hmm.
whether a Bitcoin should be $100, it should be $10,000, or should be $1 lakh.
Mm-hmm.
How do you come to that conclusion? What are the fundamental aspects to help you decide what should be the price?
Right.
And I tell you, no one has ever been able to give me a convincing reply to this. They always go into this direction, that direction, beating around the bush, but never have got a convincing reply that how it should be valued.
I see. Okay.
So
Great.
I avoid crypto.
Great. So we have a new segment for this podcast today, which is called Would You Rather, the finance edition. So let's get started. Okay.
Sure.
So, Sumit, for the Would You Rather section, I would ask you a question and give you a couple of choices, and you just pick one and just tell me why you picked that, and that's it. So, let's
Sure.
get started. So, would you rather have to invest in only one stock for the next 10 years or only invest in bonds for the same period?
I'll pick a stock which I think has a great business sustaining throughout the cycle for the next 10 years. Certainly, a stock.
Okay, a stock. Great. I think that ties in with your rapid fire question.
Certainly, exactly.
Great. So, great choice. Would you rather have a 10% guaranteed return on your investments or the ability to predict the market with 100% accuracy?
That's an easy one. So I would want to predict the market with 100% accuracy, because if I can do that, I can leverage my positions multiple times and I can be a billionaire within 2-3 days. So that is a possibility of.
I can already see the dollar emoji, the spark in the eye.
Right. I mean that's a God gift. If someone can predict it, it's godly actually. No one can. Actually.
So probably I could assume that that's one of the superpowers
Yeah,
if you could,
yeah.
possess. So according to you, which is more powerful, sectoral funds or diversified funds?
So if you are an investor who is not a professional investor, then diversified funds work really well for you.
Okay.
Because the fund manager has an option to invest more in a particular sector where they feel the opportunity is better. So you don't have to juggle between different sectors. You can have a diversified flexi-cap fund, which will take care of all the investment opportunities in the market.
Great. All right. So would you rather be able to predict one major market crash accurately or get to choose one stock that will be a guaranteed winner? That's a tough one.
Yeah, right. I mean, this is the tough one. But I think I would go with able to predict market crash. Market crashes are not easy, they are very painful for a lot of people, especially for those who do not understand the risk involved and they ride the initial bull market. But at some point in time, tide will turn. Markets from bull phase to will turn to a bear phase, and that is a very painful period for a lot of people who are not prepared for it. So if I'm able to accurately predict a crash, first I can help my clients to safeguard their portfolio, which is my main objective, to safeguard their portfolio, reduce risk, and enhance returns over a longer period of time. Secondly, I can again take a leverage position.
Absolutely. That's always there.
So I will be benefiting in the market crash as well.
Right, right.
And if you're able to do that,
Mhm.
that will improve your portfolio returns multifold.
Mhm.
So there also is a behavioral aspect to it. A 10% joy of getting 10% gain on your portfolio is much less than the pain of losing 10% on your portfolio.
Agreed. So that makes it a valid choice for
Yes.
sure. Would you rather invest in a diversified portfolio or put all your eggs in one basket?
Easy, diversified portfolio. In the current investment environment,
Mhm.
there's a lot of uncertainty. Having diversification across asset classes, across geographies, that is very important.
Would you rather retire with a modest income and travel the world or retire in luxury but never leave your hometown?
Why would you earn something and not be able to enjoy it? I think that would not be the right choice
Depends
anywhere.
on what is the definition of enjoyment. Maybe staying in the hometown is.
Okay, so if it applies to someone, that would be great.
What applies to you?
Travel.
Okay.
I am an explorer.
Mhm.
I would love to travel to different places. And I believe travel, and I have experienced also that it expands your horizon. It makes
For
you a better
sure.
human being. It
Absolutely.
changes your entire perspective. And I just somehow love being in nature. So travel with modest income, definitely.
Great. Would you rather have a personal financial advisor for free
Hmm.
or unlimited access to a luxury spa for a year?
Okay, so unlimited access to luxury spa will last a year. A financial, a good financial advice can help me create enough wealth where I can enjoy unlimited spa for many years. So yeah, definitely.
So he wants both, right? Yeah. There's no rather.
So I'll go for a free advice,
Yeah, and then
uh, then
build.
build wealth, and
Yeah,
then enjoy whatever I want to.
yeah. So it might be something else
Yeah,
altogether.
something else as well.
Absolutely. So, would you rather invest in a new tech gadget every month or have a year-long subscription to the best financial news outlet?
I'll go for acquiring knowledge
Mm-hmm.
through these financial subscriptions. Knowledge is power. It helps you create wealth, and when you have enough wealth, which helps you buy any gadgets, any point in time, that is the kind of situation I would want to be in.
Absolutely. Would you rather be stuck in an elevator with a famous economist or with a billionaire investor who has a terrible sense of humor?
Mm. So nothing against economists, but I think they are not really great investors.
Okay.
Uh, they are wonderful people with great analytical skills. But for me, if I want to create wealth, I would want to be, stuck inside the elevator with a billionaire who I can pick his brain, his or her brain, to understand how they created wealth. And that I think would be very helpful for me.
Great, awesome. So, we come to the end of this section, and if you look at Sumit's answers, the underlying base is that, first create wealth, right? And then everything else will follow. And I think that applies to applies across industry. So let's dive into a last section, which is the guest recommendations. I'm sure there are some interesting insights. So Sumit, this is our last segment
Mhm.
where we want some recommendations from you and things that our audience can check out and maybe learn more about the financial domain. So what's one book you'd recommend for anyone looking to improve their financial literacy?
Start with Rich Dad and Poor Dad by
Okay.
Robert Kiyosaki. Start with it. You will have a clear understanding of whether to build assets or take liabilities. You will be able to differentiate between assets and liabilities, and focusing on assets. That is where the game changes.
Right. Fantastic choice. About a podcast or an online resource that you found really valuable, through the years.
So I think collabfund.com by Morgan Housel, who
Okay.
is the author of Psychology of Money.
Mm-hmm.
I think that blog is very valuable. It helps you give an insight on psychology, on history, on personal finance, on what great investors think. I think that's a very valuable source to keep hooked to.
Great. Next, can you suggest one practical tip or habit that people can start implementing today to improve their financial health?
So I've been very inspired by what Warren Buffett says, and he says a lot of common sense things. So in this aspect, also, I would say that his quote again: focus on things that you need rather than what you want, so that you don't have to sell things what you need when you really, in your
Right.
later years.
Mhm.
So my recommendation would always be to keep a watch on your expenditure,
Mhm.
so that you only go for the things you need and maybe some things you want, but not spend enough money on the things you desire which you really don't need, and that can create a problem for your long term sustainable financial future.
Right, right. So that's the old world ज्ञान that we get from our parents right from childhood कि जी
Mhm.
1,000 रुपए का पॉकेट मनी है
Huh.
तो बेटा ध्यान से खर्च करना. So again, viewers, that's the tip. Okay. Lastly, if someone wants to dive deep into investing, what's one online course or platform you'd recommend?
So of late, Zerosa started Varsity
अच्छा.
online, and I found the content very relevant. They have done a superb job uh, into creating the content which can be consumed by people at large, and this is a pretty good place to start understanding about financial concepts and even personal finance aspect.
Great. So that brings us at the end of this episode today, Sumit. It was great having you.
I totally enjoyed it.
So, viewers, as we dived into today's podcast, we see how personal wealth plays a critical role in defining everything that we do in our life. Whether we want to create some social and intellectual capital, make some lifestyle choices, solve problems, solve real problems around us, we need wealth for that. And that's why we thought that this is important for us to bring you here. We'll put in all the resources in the description below. Make sure to like and follow us, and hope to see you next time.